Assalamu alaikum wa rahmatullahi wa barakatuh, dear brothers and sisters. Today we have the topic number 5, talking about the cycle of expenditure, and it divides into two parts. One is related to the purchase and cash disbursement cycle, and then the second part will be related to the payroll and human resource cycle. Here, let us talk about the basic expenditure cycle activities. So, the activities under the expenditure of purchasing cycle, starting by the ordering process, ordering the materials and supplies and services. Then receiving these ordered materials, supplies and services. After that, it's about approving the supplier or vendor's invoice, then paying the cash to the suppliers or vendor. Under the four activities mentioned just now, ordering, then receiving, then verifying the vendor bill or invoice, then lastly is the paying the cash to or disbursement of the cash to the suppliers or vendors. So under that, we can see the conceptual system behind those four main activities. One, purchase processing procedures, starting by monitoring the inventory records and finding out if there is any needed items in the inventory or below the breaking point. Then we can prepare the purchase order, then receiving the goods from the suppliers, updating the inventory records if when we receive that goods, then set up account payable. And if you notice here, we have the when we set up the account payable, we are recognizing the liabilities to the vendors by the amount of the purchase order. Then the vouchers payable system, alternate to account payable procedures that uses cash disbursement vouchers and maintains a voucher register, providing improved control over cash disbursement, which means when we use the voucher registrar, we try to ensure that those invoices are related to the right account payable or the payable that we supposed to pay to the vendors. Vouchers payable file equivalent to the account payable file. Then general ledger function posts the general vouchers data. Lastly, cash disbursement system identify the liabilities due, which is in this stage. When we identify the liability due, it's in this when we set up the account payable. Okay, for the record. Then prepare cash disbursement, update the account payable record. We update it either for the identifying the liabilities, or when we pay when we disperse that cash to the vendors, then we need to adjust by reducing the account payable, and then update the account records and post to general ledger. Okay. We should understand that the expenditure cycle is concerned with transacting businesses between the organization or the company and its suppliers and vendors for goods and services. So what is the transacting type between suppliers and the company is first sending the purchase order to the suppliers or vendors and receiving the quotation. Then we send them the approve for that quotation, and then we process receiving the goods along with the supplier's invoice, verifying and updating the system or the account payable and so on, and then pay or cash disbursement to the suppliers for that invoice. We have here more details in terms of each one of the activities. So we start with ordering or purchase order. So we start identifying what, when, and how much to purchase. Then here is the source document. Here is the purchase requisition. And normally we in the if we use basic system, then we will have form that should be filled up by the departments, by other departments like production departments, or even the other administration department, in order for the warehouse department to send, or sometime we have what we call procurement department, which is the main function for procurement is to assess the purchasing process. Choose the suppliers, and normally we choose the supplier from, if we have approved pre-list of suppliers, then we should select from that list. Source of document here is the purchase order, and then the key objectives is to identify exactly what to order and how much to do, how much do you need, and when do you need it. So that's the main questions should be asked by the purchase department or procurement department. Then the key objectives is to make sure that the purchase is authorized and that you receive what you ordered, when you want it, and what the goods are of good quality. So we need to ensure those things. One of the essential success in managing a supply chain that the raw materials and services are accurately ordered and received in time. Otherwise, this will cause issues in adding expenses in supply chain, in terms of having delay of production process, in terms of also not having more cost that because of the people. Let's say that if we don't receive the raw materials in right time, then the workers will in the production line will be doing nothing, waiting for the items to reach. So there are three approaches for to manage the ordering. One is economic order quantity, EOQ, materials requirement planning, MRP, and just-in-time inventory, GIT. Economic order quantity, EOQ, is based on minimizing the cost of the inventory. How it's work? EOQ is based on matching or trying to relate the annual cost of ordering and the holding cost of the quantity based on the movement and frequency, the the items sold, the frequency of the item sold. So in some items is sold fast, and the cost of the inventory, the cost of holding that inventory is less compared to the other items that is not frequently moved, and then the ordering cost is less. So by finding the minimum total cost, which is combined between holding cost of inventory and ordering cost, we come to the best EOQ, which is in this case is it will be this point where the total cost is very low, and normally we identify this by finding the point that connect the the ordering cost and holding cost. And then the second approach is material requirements planning. MRP is a computer-based inventory management system designed to improve the productivity for businesses based on sales forecasting. So how to forecast the sales is based on the inventory movement and the reporting from sales, the material planning, and so on. All of this will come to the material requirements planning, and then based on this we will plan for the purchase orders and work orders. Lastly, or last approach is just-in-time inventory, or GIT. GIT inventory is used to help keep costs down, free up physical space, and reduce defect rates. Normally, there is a, how to say, there is a range of GIT, or just-in-time inventory adoption. The highest, or the optimal level of it is when we have zero space, physical free physical space. We have no inventory. And ensuring the effectiveness of the vendors and suppliers to supply the materials on time of production, direct to the line of production. So it reduces the cost of holding items physically, and it reduces also the cost of uh, either the people who are working in recording the items and so on, recording and safeguarding those inventory and so on. Okay, so this one is the example of purchase requisition form, and we can see here the writing the quantity, filling up the suggested vendors. Normally, we have the list of vendors that we pre-approved. So the departments can choose vendors from the list that approved, based on their experience of dealing with those vendors. And this one is a pre-numbered form in order to ensure the control of these forms. And also we can see here we have who approved by. We can see also the vendor account number in the system. Here we have purchase order, which is more to see. Here we have more details in terms of purchase requisition. If we have more than um, uh, purchase requisition, because we cannot just order based on individual items, or based on individual purchase requisition. We just combine them and send to the suppliers. So now we finished talking about the ordering. So now we'll talk about receiving process. So after we discussed the process, the ordering process, about purchasing or purchase, receiving the purchase order item. In this stage of receiving process, we can see and recognize the increase of the inventory in the general ledger, the account, for sure, because we receiving the inventory, so we need to increase the total balance of the inventory, as well as we also need to increase the obligation and liabilities in the account payable ledger, uh, because we are um, required to pay them, so we need to recognize the liabilities to the vendors and suppliers. When the goods are received into the warehouse, the company has a legal obligation to pay the vendor. So This is what we call when we have when we get transfer the ownership of the item. So when we receive it, meaning this items is belong now to the company ownership, and they have the company have the right to use this received items. That is why it is so important to make sure that the goods are authorized. Check, normally we check it against the purchase order, and the goods received are what we ordered in the correct quantity. So we need to ensure the accuracy of the quantity and quality of the items that we receive. Lastly, the goods are in a good quality. So normally the source document for this process is the receiving report. This figure explaining the blind copy purchase order. If you see here, it is a kind of same purchase order that we just see in the ordering process, but here we try to omit the quantity and the price and the total. Here we make it empty, that's why we call it blind. This is one of the control process to ensure that uh, the custody or the staff of receiving the department are checking and ensuring the quantity, and they write down the number that they check and so on, which will consider one of the matching and reconciling the blind copy of purchase order with the purchase order purchase order original purchase order with the figures. So this will guide to match it. It should match. So let's say we order 100 pieces of item 1 of this part. So we expect that when they count up how much they receive to have 100. So this is one of the internal control procedures. Okay, so item 2, if they, let's say we order 300 and then they just receive 250, so we need, it is a kind, we discover in early stage the number of the items. So imagine if you just give the staff the original purchase order with the numbers, then it's expected that they will feel lazy to count up and check the receiving items. So they will just write, they will click, yeah, we received these items. And now actually now no more this, because we use the barcode scanning and so on, so it is more computerized. But we are talking about the conceptual system of the activities in purchase. Then later on we'll discuss the those. Okay, then here is the receiving report. Here, if you notice here, we the staff will key in these items, this number of quantity, and the maybe this is the description of the items. So normally it will be there, so but they need to write down the condition of the items if there is errors or something, and then they need to write down who inspect, who receive and who inspect, and then the one who delivered. Here is the inventory subsidiary ledger using the standard cost. So this normal process of recording the account of inventory. And here we have the relationship between the three journals: the purchase journal, the account payable subsidiary ledger, and the journal voucher. So we have if we have items received in the purchase journal. For here we can see it goes to the journal voucher, and as well as then it will goes also to the account payable to recognize the liabilities. Here, let's say how the flow of the purchase order process in the DFD data flow system. So we will start by monitoring the inventory records based on the inventory subsidiary ledger and also the valid vendors file. So this is the input to the process of monitoring the inventory or records, and then based on this process we will prepare the purchase requisition, which will guide to the process of preparing the purchase order. Prepare purchase order, we will prepare it in several copies. One copy will goes to the open file and close purchase order file, and then one copy will goes to the receiving goods, and when we receive the goods we will compare the items received with the blind copy. Blind copy means a copy that has no quantity of the items. So then the copy of the report, copy of receiving goods report will send again to the open close file, and one copy will send as well as to the set up the account payable process, but also one copy will send to receiving report file for archiving, and then one copy will or one report will send to the stores. Okay, and then we start to the process of set up the account payable. And normally when we receive we will do when we receive invoice from supplier, we will reconcile the figures and information in the invoice based on the purchase order copy as well as the receiving report copy. So based on that, we will update the purchase journal. Okay, and then we will update the account, the pending file, account payable pending file, and also we will, when we have, let's say for existing suppliers, we will when we pay back in the depreciation in the disbursement of the cash, we need to update the pending file. And then we need to update also when we receive the goods, also we need to update the inventory records and update the inventory sub ledger by the quantity of items received. And then it will be also also input to the process of posting general ledger as well as the general vouchers of the account payable. So updating the general ledger will come from inventory sub ledger and as well as from the account payable sub ledger as well. And then the normal process of posting in general vouchers file and also the general ledger. The third process under the purchase order processing cycle is approve supplier invoice and cash disbursement. Approving the supplier's invoice, it should be based in reconciling the invoice received from supplier with the purchase order, that is initial the process of this purchase cycle, and then receiving report, that's the report that show the quantity of items. So by matching those, we are creating a voucher. Supplier's invoice plus purchase order plus receiving report, it will create a vouchers. Approve, then what we do, we approve the supplier's invoice for payment. And this one, the source of document will be the disbursement voucher. Disbursement voucher is the involve the three main documents: supplier's invoice, purchase order, and receiving report, as we mentioned here. And then we disperse the cash or pay the vendors or supplier. This is the cash disbursement voucher showing the invoice number. Showing first, it shows the details of the supplier, and it shows here if we have more than invoice in terms of invoice number, invoice date, invoice amounts, and discount if there is, and then the total. Then we need to put the total amount, and we need to have the approval process here prepared and approval a different person. Okay, here in this figure we explain the voucher register. In the voucher register we try to pay based on especially if we have more than vouchers, so we pay based on that. So if you see here, we have the number of vouchers and also the date for that, the date of payment, the check number and the date of payment, and then we put here the purchase payable or voucher payable, and you can see the flow of the other items here. And then cash disbursement journal, when we recognize the payment of the of the of that voucher based on register based on voucher register. Okay, here we have the DFD for cash disbursement, starting from identifying liabilities due here, and then it comes from open account payable file, which is from the cycle, or the, if you remember, from the cycle of purchasing order process, from receiving the items, from ordering and receiving the items cycle. And here we bring that open account payable file to illustrate the due date and amount due, and then based on this we will send the account payable package to do the prepare the cash disbursement. Okay, then from here we will send the check to the suppliers for the payment, but also we will send the update of payment detail to the check register, and we will send also to update the account payable, uh, just to copy of the check and the account payable bucket. And account payable record, updating this record will affect the account payable sub ledger, and as well as closing the account payable file for that transaction. Also will update the post to general ledger, and it will come from the update of account payable, as well as from the disbursement file process from the general voucher. Okay, and then it will update the general voucher file and general ledger. After we discuss the conceptual system of the purchase expenditure cycle, let us here discuss the physical systems in the two sides of it: the basic computer processing or the advanced technological processing. Sometimes we call it the integrated system. In the basic technology system approach. For the expenditure cycle, computers tend to be independent purchase cycle system, and the information between departments is communicated via hard copy documents, meaning that still human involvement is more, and then maintaining physical files of source of documents is critical to the audit trail. The processing steps in basic purchase system start by begin with inventory clerk prints the purchase requisition by access to the purchase requisition file. File created when the inventory dropped to a reordered point, meaning that it will when the file of purchase order will created when the inventory balance is dropped for some items. So we do reorder. Uh, we prepare the order according to the need of the inventory. Then two purchasing department receives the purchase requisition, and they will do those actions, adds records to the digital open purchase order file, and purchase order copies will be sent to vendor, inventory controls, account payable, and receiving department will send one copy for purchase order, but it will be blind of the figures of the quantity and the item description. And if you notice, most of the process here is quite same to the conceptual system of the purchase cycle. However, we have slight different in and some digital or computer touch process due to the approach that we are talking about is the basic computer purchase processing. Okay, and then 3 is receiving reconciles goods with the backing slip and blind purchase order. And when the department receive the goods or the warehouse receive the goods, the report to storeroom and purchasing department, and also files or archive the hard copy of the receiving report. 4, account account payable reconciles the supplier's invoice, purchase order, and receiving report. So when they reconcile, they will directly record the transaction in the purchase journal. Lastly, general ledger department receive the general vouchers from the account payable department and account summary from inventory control, and will update the general ledger in general, and also the inventory or the general voucher, sorry, the journal voucher. Okay, so this is the basic technology purchasing system, and you can see here we have too much process based on the department, but you can what I would like to highlight here is the involvement of some hard copy documents, which is here you can see the hard copy document, and as well as we have here is the computer database file. Okay, so you can see also here is terminal, digital terminal to key in a real time, and then we have uh, in some point we have the the digital database processing and so on. Important things to know that you need to recognize whether it's basic or advanced system the company is applying. So if it is basic, then you need to draw something like this accordingly. And then if it is very advanced, then we will talk about more computer and more automated automated what we call automated processing under the cycle. Okay, so here is still the process. We still have the process of the receiving items here, the account payable subledger, and here we have the reconciling process of the three document receiving report, purchase order, and supplier invoice, and then based on that we will update the account payable subsidiary ledger, and as well as we will process the payment. So for the basic cash disbursement system process, we start with the account payable clerk when reviewing the account payable backed in open account file, and then identify the items due and sends the documents to the cash disbursement for to process the payment to the supplier. Second, cash disbursement reviews the documents and prepare three-part check and records the pertinent data in the check register. They will check and support the documents sent for signature and mailing. Account payable backed and check copy returned to the account payable for update. Then the files check copy and send summary journal voucher to the general ledger. Account payable department removes the liability because we will adjust the account payable balance by reducing the account payable because we pay already, we send the check, and send the account payable summary to the general ledger. General ledger departments post to general ledger control account and files the documents. Here in the integrated purchase processing, or we can call it the advanced purchasing process, the departmental activities lower than the basic technology system. In other words, the human involvement is less and more automated process of the transaction activities in the cycle. So let's see how that's happened. So you can see here the integrated purchase system. We can see here less hard copy documents and more automated processing. Here's the processing system and more database computer based database filing. Okay, so we can see here starting from reviewing the purchase order, and then list the purchase order in the file. Then after that we do a terminal. We key in the data of the purchase order into the system to process the purchase order, and then you can see here we check the purchase requisition file from sales order system if we have the based on the forecasting of sales, the system can create a forecasting of purchase requisition, and we will have the vendor file, the digital vendor file as an input as well, and then we have uh, the the update. We'll have the update to the open close purchase order file, receiving the report file, vendor invoice, inventories, subsidiary ledger, and general ledger file. And then we will print out the hard copy of purchase order and send it to the vendor. And in some cases, very more high advanced computer, when we send the system will send a digital purchase order to the suppliers. We will discuss this in end of this topic or this class. Okay, so then when the vendor send the packing slip and the invoice, we will key in to the system, and reconcile the review blind copy of the purchase order and prepare the receiving report when we receive the items, and then we will prepare the two hard copy, the packing slip and receiving report. And then when we do we need to update uh, the account payable. So updating based on the supplier's invoice, either hard copy, but if it is online digital invoice, then it will be more automated. And then based on that we will update the supplier's invoice. And general ledger will be updated based on those documents, review the general ledger, and then update the general report.
Here, let's say in more details the integrated purchase processing, looking into the automated process or the manual one. So the starting by purchases computer application reads the purchase requisition file for reordering, and prepare and sends the purchase order, and then after that updating the record. Then the second process, which is manually based, is receiving the reconciled goods with the packing slip and blind purchase order. Number three, also manual based, record added receiving report file and purchase order closed. Then number four, inventory and general ledger control accounts automatically updated. Number five, account payable clerk receives the invoice, adds the record to vendor's file and files hard copy. Then automated process, system automatically link vendor's invoice, account, purchase order and receiving report, reconciles documents and create virtual account payable backed. Number seven, account payable clerk reviews virtual backed, and if no discrepancies or differences are found, systems automatically approve. You see here the receiving screen, which is digital documents. Here we have the same data related to the receiving of the quantities, but it's based on the screen. And then here we have the file structure for the account payable supporting documents. So the best way is to see the name file, purchase order file, receiving report file, vendor invoice file, and then cash disbursement file or check register. So we can see here the matching or the matching between the purchase order file based on the purchase order number here, and then also with the vendor invoice it will be matched. So this is kind of, we can reconcile the file based on the record in the system. The system automatically will do the checking and matching process. And then for the vendor invoice file with the cash disbursement, the check numbers will be checked with the disbursement file. Okay, here is the virtual account payable check. So checking the same backing account payable backed documents. So we have the documents information, the purchase order, the receiving order, also the number of checks issued, and then we have the some details about the vendors names, documents type, and general ledger account. You can see here how only one process of cash disbursement, and it is we are dealing with more digital files here. So now we will talk about expenditure cycle risk and internal control. So we will discuss that. So as usual, we will have first the table summarizing everything, then we will have more details. So in this table is summarizing the expenditure cycle risk and controls, and the controls will be based on physical control or it is based on IT controls. So what is the first risk is unauthorized inventory purchase. So in the physical control, we will have we should have transaction authorization, formal purchase requisition. We should have authorization of the form to order to process the what we call purchase requisition. And then in IT control side, we should have automated purchase approval. The system can automatically approve that if it is based on the balance in the inventory, based on those kind of related files, like what we say the sales forecasting, as well as the inventory balance. The second risk is receiving incorrect item. So in physical control, we can control it by having independent verification and supervision in receiving department. So independent verification, by receiving department reconcile the receipt with the purchase order blind blind copy. So we have a blind copy, no mentioning the numbers of the quantities or the description of the items. Then we ask the receiving department to receive the items and fill up the form, and then later on we do the reconciling. And we also can have the supervision in receiving department, whereby in IT control scanning technology, we have, as I mentioned, we have this the barcode scanning to scan every items received, and that will automatically through the system will process the matching to ensure it is the correct items being ordered in the purchase requisition and purchase order. The third risk is inaccurate record keeping. So the physical control is to transaction authorization, account payable department authorize cash disbursement to make the payment. Also, the second control activities is accounting records, having the audit trail documents, journals, accounts, and files, as well as the general ledger and so on. And then independent verification, we have inventory control, account payable, cash disbursement, and general ledger. We review the matching of the items, which we call it the watching or tracing. In the IT control side, input data, edit, error messages, automated posting to account, file, backup. All of this is items that deal with the application controls. If you remember, in the last 2 weeks we discussed this. And then we have the misappropriation of cash and inventory, which is the stealing or the fraudulent by the individuals or employee. So how to control it physically? Supervision, receiving we have supervision in the receiving department. We have independent verification. We have three-way matching, and we mentioned what is the three matching. We also we are matching the first in receiving the receiving goods process. We match the purchase order. We match the also the receiving report, and then we match the invoice from the from the suppliers. Number three, sorry, segregation of duties. So the cash disbursement is and the general ledger, account payable functions, warehouse inventory records. Those functions should not be isolated or gathered in one function. If there is gathering, then we should think about which one, how too much in ensuring those functions is not giving the opportunity for fraudulent by the staff, by any misappropriation of cash and inventory assets. In IT control, automated three-way match, then we have the multi-level security to provide segregation of duties. Then the last threats and risk is unauthorized access to data. Physical control is access control, source document, general ledger, and segregation of duties, sub ledger and general ledger assets custody. So we ensure we have two physical controls. First, ensuring the accessibility of those documents and records, so we ensure there is some restriction. Second is segregation of duties between the main functions, asset custody and the recording. Whereby for IT control side, we have password control, multi-level security to prevent unauthorized access to the data. So in this slide, it's explaining in details the same concept in the table just now. We mentioned the risk and the physical controls and IT controls for each one of them. So this slide is as well is explaining the same idea. Here we have more details in the risk and what is the IT or physical control against that risk. So let's take one of the examples, unreliable suppliers, number 5. So we have two controls. A is monitoring supply performance, and then require quality certification by suppliers. Okay, kickbacks, supplier audits, and prohibit gifts. Kickbacks means receiving gifts from the suppliers to give them to ensure that they supply to the company. So that is also one of the issues that and risk that threaten the purchase processing activities. And the controls is to have suppliers audit to check if they practice that, and also to train the staff and monitor them, ensuring the prohibition of. And this one is related to receiving process. We have a list of risk and we have the controls. So let's take number 4, let's say inventory thieves, for example. So we have 3 controls to ensure the misappropriation of inventory. So we have restrict physical access to the inventory and warehouse. B is document all inventory transfers. C is segregate custody based receiving of inventory. Here we have approval supplier invoice. The risk is errors in supply invoice and mistake in posting to the account payable. And the risk, the controls is for the errors in supplier's invoice, verify the invoice accuracy, whereby for the mistake in posting to the account payable, we have 2 controls, data entry edit controls, as we mentioned just now, the input controls, and B, reconciles details account payable records to the general ledger account payable account. Here we have the cash disbursement activity, and we have 6 risk: failure to take discount, pay for item not received, duplicate payment, thiefness of cash, check alteration, and cash flow problem. So we have a list of controls for each one of this. So we take maybe number 4. The number 4 is the thiefness of cash. So physical security of checks, separation of duties or segregation of duties, and reconcile the bank account. Number 6, cash flow problems. So the controls is cash flow budgeting. Re-engineering is a new concept to redesign, re-lock into the process, any process or any flow of transaction or structure in any organization, with the objectives to minimize the cost, cancel the non-adding value activities, and ensuring that everyone and every department in the organization is working in the optimal level of their effectiveness and efficiency. And with this, it enhanced the profitability in general. So EDI system is based on the relationship between the business partners, meaning that the suppliers and the customers in one side. So how to ensure that is by reducing the discrepancies or differences in terms of the communication, and reducing the human involvement to resolve that relation. So the key element of success in implementation of trading partner agreement is to eliminate discrepancies that requires human involvement to resolve. So electronical data interchange, meaning that we try this to ensure the interchange of the data digitally between the business partners, the customer or suppliers with the company. So this is a good example in ordering process without EDI. You can see we start with buyer generate the purchase order, and then buyer will send it to the suppliers. Supplier receive the order. Suppliers will enter the invoice into their system to issue the invoice. Invoice is created, and then invoice is sent to the buyer. Then buyer enter the invoice into their system to process the payment. Whereby if we use EDI, the buyer internal system integrate with ERP in sending purchase order, and then EDI system will process all of the intermediate documentations, approval, and so on, and then the supplier's internal system or ARB will process the purchase order or the customer order, in the other word, the customer order, and then send the invoice to the EDI system, then to process it as simple as that. Some organizations have eliminated the receiving functions in order to send the goods directly to the production, which avoid the delay and associated handling costs, so ensuring the functionality or the effectiveness of the process. The accounting and auditing issues with this is how to count for the inventory receipt with no receiving functions and report. The accounting for scrap in the production process, so they don't have much to ensure the control process if we eliminate the receiving function. Unique risk that need to be recognized and looked at is and controlled is including ensuring only valid transactions are processed and risk of unauthorized access to the accounting record, which is more to related to the technology. Uh, Also considering the cyber security and so on, if it's hacked, because when we using the EDI, meaning that we are uh, more involved in internet processing and activities.
Let me give a short summary here before we end up. Uh, in the purchasing cycle, there are four main activities, and starting by the purchasing order or ordering process, and then receiving the purchasing items, then verifying and processing the invoice from the suppliers, and lastly is the payment process, payment to the supplier. So those activities are in general, if you see, we keep repeating the DFD system flowchart for the conceptual system. We can see how too many departments are involved and too many documents are involved, especially in the physical system. And then when we discuss the basic system, we have less involvement of computer and we have more involvement of human and departments. We can see that still, yeah, there is some uh, digital files here and there, but the system still considered as basic computer or technological system. Then we discuss the advanced system where we have more automated process and less involvement of human and departments. And we can see if when we look into the DFD of the integrated system for purchase, we can see that more automated systems, more processing process, more digital files, and so on. And we have less documents, we have less physical documents and manual documents and process. And also we discussed the end of the topic talking about the EDI, the electronical exchange exchange of data. Uh, when we have even lesser manual communication with suppliers or customers, we try to digitalize these relations by having the EDI system. And yes, for sure, it will enhance the effectiveness, reducing the cost, avoiding any delay of receiving the goods and so on. But also the questions is about the accounting sides, how to ensure the function, the checking the items and so on. And we discuss in details the risk and threats related to the purchasing cycles, and we discussed the controls, the physical controls and the IT controls. With this, I can end up this class with thank you, uh, and hopefully we have a Q&A next week inshallah. And wassalamu alaikum wa rahmatullahi wa barakatuh.